Hi viewers, welcome back to my YouTube channel. Let's take a look at management accounting and a topic called dropping a product. The following data relate to ABC Limited as at 31st December 2024. So we have the product ABC and the total. So the units sold in kg is for product A is 1000, product B is 2000, product C is 1500, which is the total. The total for ABC is this value here. Then for sales, for product A is 10,000, product B is 20,000, and product C is 15,000, and these are the total sales. Then direct materials, we have the 2,000, 5,000, 6,000. Direct labor, 3,000, 4,000, 1,000. Then variable overhead, 1,000, 6,000, and 1,000. And this is the total for ABC. And the contribution margin. So how is this contribution margin derived at? That will be your sales minus your expenses. So all the direct material, direct labor, and direct overhead are expenses. So you deduct them from your sales. And see the values of those expenses are in bracket, which means deduction. So 10,000 minus 2,000 minus 3,000 minus 1,000 will give us 4,000. So your sales minus your variable sales minus variable cost will give us your contribution margin. So we have for B is the same, for C is the same, then the total. Now for your fixed cost, we have your rent and your salary. So you're also going to deduct it from your contribution margin. So it's 4,000 minus 4,000 minus 4,000 minus 2,000 minus 3,000 will give us 1,000. Yeah, this is like a loss. So we have 4,000 minus 2,000 minus 3,000. So it's a loss. Let's say for instance, now this is your profit and this are your expenses. So the total of this fixed cost is 5,000. So your total expense is 5,000 and your profit is like 4,000. So when your profit is less than your expenses, then that is a loss. So that's why this 1,000 is in bracket. Then for product B, we have 5,000 minus this minus will give us this. This minus will give us this. And the total addition of this amounted to this, addition of this amounted to this. So we were told that the following information were also relevant. A. The management of ABC is considering dropping a product A because of its consistent loss. You can see this is it. This value are called net profit. Whenever net profits are in brackets, means a loss. So it's considered of its consistent loss. The product A is dropped. The available fixed cost will be shared between the remaining departments and units sold. You are required to achieve the management to advise. You should be advised. Advise the management on the effects of dropping product A on the total net profit. So we have your table already, which is B and C, because we are dropping product A. Product A is out of the question right now. So we're going to have our sales. The sales for B is 20,000 and the one for C is 15,000. And my total is 35,000. Then the next one is your variable cost. Remember I said variable cost is the addition of all your direct material, direct labor, and variable overhead. So variable cost, direct material plus direct labor plus direct variable overhead. So for the B, our direct material is 5,000, direct labor is 4,000, direct variable overhead is 6,000, which is a total of 15,000. You can see it here. Direct material 2,000, labor 3,000, variable overhead. Sorry, we are not looking at product A anymore. We're looking at product B because product A is out of the question. So for your um product A, product B, your direct material is 5,000, 4,000, and 6,000, which is this 5, 4, 6, which amounted to 15,000. So the variable cost for product B is 15,000. Then that of C is 8,000. And the total is 23,000. So we have to deduct. So that will be 5,000. This should be 7,000. And this should be 12,000. And this will give me my contribution margin. CM stands for contribution margin. So the next step is to less your fixed cost. So this fixed cost for this B here will not need to be affected. So let's pick for the salaries. So your fixed cost, you have your salaries and your rent. So we have the salaries for B is 1,000 and for C is 2,000. Then for rent, this one for the rent value for B won't be 2,500 and for C won't be 3,000 because we were told in the question that the available fixed cost will be shared between the remaining departments in units sold. Again, the management of ABC is considering dropping the product A because of its consistent loss. If product A is dropped, the available fixed cost will be shared between the remaining departments in units sold. So the rent here will be changed. It won't be this and this. It will change. So for the apportionment, I have the workings here already. So we have your total rent is 7,500, which is this value here. So your total units sold for B and C. Total units sold for B and C is 3,500. That is units sold for B and C is 2,000 plus 1,500. That is 2,000 plus 1,500. That was what amounted to this 3,500. So for the apportionment for B, for the rent, that will be the units sold, which is 2,000, divided by the total units for B and C times the total rent for ABC. That is the apportionment, which is 4,286. So that would be 4,286. And for C, units sold divided by the total units sold, which is 3,500, times the total rent for the three products, which is this, which amounted to this. That is for C. That will be 3,214. So since this is contribution, which is profit, and these are expenses, so they have to be reduced. And the total for this is 3,500, and the total for the rent is 7,500. These are expenses, so they have to be deducted. So this plus this is 5,286. So it is greater than the profit. So the difference is 286, which is a loss. This minus this will give me 1,786. And 12,000 minus 3,500 minus 7,500 will give me 1,500. So this is called my net profit. So this is my old net profit for B. The old net profit for B is 1,500. And the current one is this, which is a loss. The old net profit for C is 2,000, and the current net profit for C is 1,786. The total net profit of the former is 2,500, and the new one is 1,500. You can see that there's a drastic reduction. So we were told to advise the management on what to do when product A has been dropped. So the decision is that based on the computation above, if product A is dropped, net income will drop from 2,500 to 1,000 to 1,500. Therefore, product A should not be dropped since it has a positive contribution margin. Anyway, the decision is that based on the computation, if product A is dropped, net income or your net profit will also drop. That is, it was formerly, the net profit was formerly 2,500 and it dropped to 1,500. That is from 2,500 to 1,500. So product A should not be dropped since it has a positive contribution margin. So that is the usefulness of dropping a product. See you guys in the next video.